What's up, everyone? This is Asian Guy Analysis, and let me tell you something right now. What just happened in the silver market is going to go down in history. I'm not exaggerating. I'm not being dramatic. We just witnessed the single biggest one-day crash in silver ever. Not in a decade, not in a generation, ever. A 26% collapse on Friday, and then today, another 10% gone. If you went to sleep on Thursday night feeling like a genius for holding silver, you woke up Monday morning wondering what the hell just happened to your portfolio. Silver dropped to around $75 per ounce and almost completely erased everything it gained this entire year in just two trading sessions. 2 sessions. All those months of gains just gone. So if you're sitting there right now, stressed out, confused, angry, or maybe even thinking about buying this dip, you need to watch this entire video because I'm about to break down exactly what happened, why it happened, and what you should be thinking about moving forward. Let's get into it. All right. So first things first, we need to talk about what actually triggered this historic sell-off. Because crashes like this don't just happen randomly. There's always a catalyst. And in this case, the catalyst came straight from the White House. President Donald Trump announced that he plans to nominate Kevin Warsh as the next Federal Reserve Chairman. Now, if you don't know who Kevin Warsh is, let me explain why this single announcement sent shockwaves through the precious metals market. Kevin Warsh is what we call a monetary policy hawk. And when I say hawk, I mean this guy believes in tight monetary policy, higher interest rates, a strong dollar, and less money printing. He's basically the opposite of everything that has been fueling the silver rally for months. See, silver has been running higher because investors were betting that central banks would keep printing money, keep rates low, and keep debasing currencies. That was the whole thesis behind the rally. But now you have a potential Fed chair coming in who might completely flip that script. And the market reacted immediately. Now here's the thing you need to understand about silver and interest rates. Silver doesn't pay you anything to hold it. It doesn't give you dividends. It doesn't give you interest payments. It just sits there. So when interest rates are low, that's fine because bonds and savings accounts aren't paying you much either. But when rates go up, suddenly investors start thinking, why should I hold this shiny metal that pays me nothing when I can get 4 or 5% risk-free in treasury bonds? Money starts flowing out of precious metals and into interest-bearing assets. That's exactly what happened. The moment traders heard Warsh's name, they started doing the math in their heads and realized the environment that created this silver rally might be about to change dramatically. But let me be real with you. The Warsh news was the trigger, but it wasn't the only reason silver crashed this hard. To understand why we saw a 26% single-day drop, you need to understand what was happening in the months leading up to this. Silver had been on an absolute tear. We're talking about a relentless rally that pushed prices to historic highs. And this rally was built on some very real fundamental factors. The silver market has been in what's called a structural deficit for years now. That means more silver is being used than is being mined. Industrial demand has been surging, especially from the solar energy sector and electronics manufacturing. Electric vehicles, smartphones, solar panels, they all need silver. So the supply and demand picture was genuinely bullish. On top of that, you had the debasement trade in full swing. Investors around the world were looking at government debt levels exploding everywhere. The United States, Europe, Japan, China, everyone is running massive deficits and printing money to cover it. So smart money started rotating out of currencies and bonds that they felt were being devalued and into hard assets like gold and silver that governments can't print. This was a legitimate investment thesis, and it attracted a lot of capital into the silver market. Then you had all the geopolitical chaos adding fuel to the fire. Wars, tensions between major powers, trade disputes, sanctions, uncertainty everywhere you look. When the world feels unstable, investors historically run to precious metals as a safe haven. And let's not forget the concerns about Federal Reserve independence that were floating around. Anytime investors worry that the central bank might become politicized or compromised, they start looking for assets that exist outside the traditional financial system. Silver and gold fit that description perfectly. So you had all these factors stacking on top of each other, creating the perfect environment for a massive silver rally. And that's exactly what we got. Prices kept climbing and climbing. But here's where things started to get dangerous. When you have a rally that strong, it attracts momentum traders. These are people who don't really care about the fundamentals. They see prices going up and they buy because prices are going up. They're riding the wave. And then you had a huge wave of speculative buying coming from Chinese investors. Retail traders in China piled into silver, adding what I can only describe as froth to an already bubbling market. Now momentum works great on the way up. All those buyers pushing prices higher and higher. But momentum works both ways. And when sentiment shifted, all those momentum traders who were buying became momentum sellers. The same force that amplified the rally amplified the crash. When you have leveraged traders, margin positions, and hot speculative money all invested in the same direction, any reversal can become violent. And that's exactly what we saw. The Warsh nomination gave everyone an excuse to take profits. Think about it. If you bought silver months ago and you're sitting on massive gains, you've been looking for a good time to cash out. This news was the perfect opportunity. One big trader sells, then another, then the algorithm starts selling. Then the leveraged traders get margin calls and are forced to sell, and suddenly you have a cascading waterfall of selling pressure that feeds on itself. Fear spreads fast in markets like this. Nobody wants to be the last one holding when prices are falling this hard. So what does this mean for you if you're invested in silver or thinking about getting in? Look, I'm not going to sit here and tell you what to do with your money because I don't know your personal situation. But I can share my analysis and how I'm thinking about this. The first thing I want to point out is that despite this massive crash, the long-term fundamental picture for silver hasn't really changed. The structural deficit is still there. Industrial demand is still growing. Governments are still running up debt. Geopolitical tensions haven't disappeared. The reasons people were bullish on silver before this crash still largely exist. What changed is sentiment and positioning. The market got too crowded, too leveraged, and too euphoric. This crash was a reset of expectations, not necessarily a destruction of the investment thesis. That said, you need to be careful here. Just because the fundamentals are intact doesn't mean prices can't fall further. Markets can stay irrational longer than you can stay solvent. If Warsh gets confirmed and starts signaling aggressive rate hikes, silver could face continued pressure. The dollar could strengthen, making silver more expensive for international buyers. These are real risks you need to consider. For short-term traders, I would say this is an extremely dangerous environment. When you see 26% moves in a single day, that tells you volatility is through the roof. Leverage can destroy you in conditions like this. If you're trading with borrowed money or using options, please be very careful. Position sizing matters more than ever right now. For long-term investors who believe in the silver thesis, this kind of crash can actually present opportunities. Historic sell-offs often create attractive entry points for patient capital. But you need to be honest with yourself about your time horizon and your ability to stomach further losses. If prices keep falling, nobody can call the exact bottom. I think the most important thing to watch going forward is what happens with the Federal Reserve. If Warsh gets nominated and confirmed, pay close attention to his statements about monetary policy. If he signals aggressive tightening, silver might struggle. But if inflation remains sticky and the Fed is forced to stay accommodative despite Warsh's hawkish reputation, the silver thesis could come roaring back. All right, everyone, that's my full breakdown of what just happened in the silver market. This is Asian Guy Analysis. I appreciate every single one of you who watched until the end. If you found value in this video, do me a favor and smash that like button. It really helps the channel grow. Subscribe if you haven't already, because I'll be covering all the major developments as this story continues to unfold. Drop a comment below and let me know your thoughts on silver right now. Are you buying this dip or are you staying away? I want to hear from you. Until next time, stay sharp, manage your risk, and I'll catch you in the next video.